Japan GDP came in. It is up, but short of expectations. So lots of earnings and lots of economic numbers to digest, as well as other factors which are affecting the markets. Now, the Indian markets come online in about 45 minutes. Here's what GIFT Nifty futures are indicating, and very much following the tone that we see across the rest of Asia, which is we are just expecting not significant gains. And we can start asking where that resistance level might be for the Nifty. You can see 24,403, 399 around that level. But some analysts saying that support is at 24,000. At least that gives it a floor. Now, oil prices are very much in focus for investors. They are extending their gains, building on the 5% gain that we saw over the course of last week. The US-Iran deadlock drags on as we near the expiry of the US-Iran MOU in just under an hour from now. Both sides continuing to claim control over the Strait of Hormuz. Shipping data from Kepler shows that shipping through the strait has stalled even further, with just 5 vessels transiting the waterway on Saturday and Sunday combined, compared to 31 the previous weekend. Meanwhile, India has reduced windfall taxes on exports of petrol, diesel and aviation turbine fuel. This according to a government order. The duty on diesel was cut to 24 rupees per litre, while the tax on petrol was eliminated altogether. This follows a previous reduction. The changes took effect on Saturday. Now, gold, this is one of our headline stories, is holding near 2-month highs, near 4,400, driven by a weaker dollar and cooling US inflation data. The softer price indexes and weak jobs data have slashed bets on a September Fed rate hike down to around 30%, providing strong support for non-yielding bullion. Well, Jateen Trivedi is VP Commodity and Currency Research at LKP Securities. He joins us down the line. Jateen, thank you so much for joining us on the show. Let's start with your read on these prices recently and really what's driving the agenda.
Manisha, thank you for having me on the show. Very good morning to our viewers and the CNBC team. See, the main drivers of this gold prices in last couple of years, if we talk about a longer term horizon, it has been the rupee depreciation and the dollar, stabilizing below 100. Also on the Indian terms, the rupee depreciation has helped the Indian gold prices to remain highly elevated, despite the support and the geopolitical tensions that we have seen globally, the Russia-Ukraine conflicts, the COVID in the last 4 to 5 years. The Indian rupee has shown some weaknesses. And due to that, the gold's international market prices have, been relatively very higher, around 50 to 60% still onto the, gains that we are sitting on the prices is still looking quite bullish. The scenarios are quite bullish. The the conflict has shown some, issues into the gold prices rise, but the dip has been an accumulation, strategy for the Indian market buyers, especially the jewelry sector, and the demand for the physical gold from Indian households is going to show some uptick after the prices have shown some stabilization. Although the H1 2026 has shown some relative weakness in terms of quantity of buying because of the import duty hike by the governments in the month of May 2026, but still the volumes not have been tried because of the highly prices elevation. So as far as the prices concerns, I'm looking at the prices to remain positive, around about at 150 in Indian terms, 150,000 Indian terms, and 4,400 at the international prices, dollar terms. The support lies at around 145 to 140 on a trend basis. On dollar terms, I'm looking at 4,000 levels to be holding for the next quarter or so. Not looking at Federal Reserve to be aggressively onto the rate cuts as of now. It will be a very surprising move if there is a very strong rate cut, scenario and a hawkish tone continues. I'm looking at the curve to, turn towards the dovish sign post September or December, at least by the late December 2026. So going ahead, the markets are looking positive. Any kind of dip towards 5 to 10% is a very good, healthy opportunity to stay invested into the gold prices.
Yeah, actually, we're looking at gold futures right now and pointing higher. But I would say in just percentage terms, all moderately higher. What I'm hearing from you is there's sort of a two-tier thing here. So you've got the sort of the Indian market scenario, but then you've got the wider global investment scenario. Let's just focus on the Indian scenario for a second, because obviously where the rupee sits vis-a-vis the dollar, and obviously the price pressure that's coming out of oil, and just the uncertainty hedge seems to be playing a lot into sentiment around gold at the moment. Would you agree with that scenario, or is there something else at play here?
I think the demand cycle in Indian markets has shown some amount of retracement. Although the May month government's input duty hike has played a little bit of a negative role in terms of adjusting the prices at which the base level will be acting. So, for example, in Indian household, it has been noticed that the prices, whenever they form a base or they stabilize, the people come out to buy in quantities which they regularly do. I mean, the number of volumes must have been tried because of the highly elevated prices. But the uncertainty of the prices keeps the market away or the buyers away. In Indian households, the jewelry demand and the physical demand cycle turns positive whenever there is a price-based case scenario. So in the recent 2026 first H1, we have seen some downtick due to the input duty hike, and I think 131 tons of gold was registered in compared to 135 or 138 last year. So there has been a marginal downtrend definitely, but the price volume and the price increase has supported the overall sentiment of the volumes into the jewelry sector. So even though the quantity has been less by the Indian households, it is going to support going ahead because the prices have now stabilized. So whenever the price stabilization is there, the Indian household are going to come out and have a good investment cycle into the gold, especially compared to the other asset classes which are still a little bit riskier due to the scenarios on the Indian economy side as well, and onto the link to the global scenarios where the US India links have shown a little bit of a downtrend. Now gold prices in Indian terms is going to react positively because of two to three main reasons. First, rupee depreciation is continuously we are registering around about at 95. I think the trend is still weak towards 96, 97. Gradually, it is going to shape up. That is going to support the Indian gold market. Along with that, the dollar price is stabilizing around 100 or below 100. That again gives support to the dollar terms gold prices and onto the Indian terms as well. So I think prices are going to be range bound or positive for the next month or so. But going down to the short term to medium term phrases, the prices are going to stay elevated above 140, 135, 1 lakh 35, 1 lakh 40 in Indian terms. And onto the dollar terms, I'm feeling $4,000 should remain a base case.
Yeah. Okay, before we get on to the broader scenario for the markets, for the gold market, just one more question that's India focused. Of course, we had Akshaya Tritiya, which has been recently, and we've got Diwali coming up. So, I mean, where are these going to, I mean, what are your expectations?
See, relatively these base case scenarios which are working onto the Indian household, demand cycle, Akshaya Tritiya brings in a lot of, sentiment buying from Indian households, and Diwali especially, brings in a lot of cheers, and buyers are relatively going to come out and take the prices as their base case. So even if the prices are elevated towards 4,500 or 4,700, and in Indian terms 1 lakh 60 or 1 lakh 65 even, the buying momentum is going to be there since they have seen the last couple of years as how bullish can a gold be in terms of uncertainty of the markets, and still the markets are uncertain. So Indian households are aware that the people investment cycle has to be there. So earlier it was in the form of jewelry only, but in the recent years the investment cycle has turned. The portfolios have seen a good amount of allocation in gold terms, whether by ETFs or whether by physical demand as well. So I'm looking at Akshaya Tritiya, Diwali, and also the wedding season to show some good numbers. Also the jewelry sectors to whom we are talking about, they are also quite positive about the outcome of buyers coming out and supporting the prices. Even if there is a volatility towards 160, 1 lakh 65, or even on the downtrend of 1 lakh 30, 1 lakh 35,000 in Indian terms, or 3,800 to 3,600 on dollar terms, or even 4,500 and beyond. the buying momentum should be supported in terms of festive demands.
Okay, well, intraday trade, we are up about 1/3% at the moment. Let's broaden it out then. What are the hedged option strategies that you're pursuing right now when you're looking at gold as a broader investment?
See, hedge option strategies that we relatively, focus on is definitely on the bull case scenario. The underlying price that we, focus on is going to be onto the positive side for us. Whenever the prices are showing some higher tick, we are advising our clients to, to remain invested and hedge their underlying assets in futures with, relatively, either shorting the call options or, giving out a positive case scenario by staying invested in ETFs and booking their profits into the futures market. Underlying base case scenario is remain positive with Indian terms because the rupee depreciation is definitely helping the overall sentiment of the market. Bull case scenario, bull call spread or the futures market, we're staying invested on the higher prices. This is what the focus has been, and the recommendations are on that terms that remain highly invested in gold market, allocating around about 10 to 15% at least into their portfolios. That has been the base case. And in the recent years, we have also updated towards around 20 to 25% as well, because the outperformance in the gold sector has shown sector-wise relative outperformance, as well as the asset allocation in portfolio has seen some good amount of allocated in terms of comparing it with Indian markets or with the global markets as well. So the portfolios have been seeing good amount of allocation in gold.
Okay, so you have pointed to a number of already in this conversation, the US dollar, interest rate expectations as affecting the price. But something else that we need to talk about, of course, is geopolitics. We know that this memorandum of understanding is due to expire very soon. This 60 days expires today. We saw the number of ships actually managing to get through the Strait of Hormuz declining on the week. So the question is, there's still so much uncertainty around the US-Iran situation. Those energy prices continue to be elevated, up some 5% on the benchmark over the last week. To what extent is this playing into the inflation expectations and pushing up and therefore affecting these levels on gold?
Good question, I think, Manisha. See, in the last 3 to 4 months, the Indian markets has shown some changes onto the regulation side. The government has been proactive about these things because this issue between the Western Asia side, the US and Iran conflict, that has definitely, you know, dependency on the imports has risen because the imports have been shattered because of the Strait of Hormuz closure. The relative, rupee spending has become higher. So whatever things the Indian markets are importing has been onto the higher note, and hence the deficit has been there. Governments have taken a proactive measure by rising the import duty to 15% in gold, so that at least the gold market sees a little bit of a downtrend, and hence the Indian rupee would show some resilience to the overall issues. Then there is a basic need of crude oil, which the country cannot deny it, and hence it was relatively shown that the energy market will see an uptick of rupee spending, and hence the other sectors needed to be constructed for the dependency. So relative statements were there to show some resilience for buying gold at higher levels. Even if the import duty was high, there was seen some amount of buying, but the numbers overall started deteriorating in the last quarter or so. So definitely, I'm looking at this issue of US-Iran to affect at some point, even if the MOU gets stated, or it shows some positive sign between US and Iran to solve this issue. Still, the Indian markets will see some inflation-related issues because of the depreciating of the rupee. The FIs are also not turning quite, strongly bullish as of now. We are seeing some relative support from the FIs in the last few weeks or so, but that number needs to, turn positive for the, forecast of inflation to turn positive, because the FIs coming back definitely shows some hints that the inflation and the data crunch is going to be on the positive side. So Right now, the situation is still volatile. The inflation, the recent inflation number has also shown some uptick into the Indian markets, although the global markets are still, facing neutral inflation numbers. But crude oil prices staying elevated definitely does not help the inflation numbers in India. So unless and until the crude oil, does not, start coming below $75, it's going to be a little bit of a problem for inflation numbers in India. And I'm expecting the inflation numbers to start cooling off post September. I think the MOU or the US-Iran issue will start showing some positive signs post September, I think.
Yeah, I mean, the RBI says that for now, those numbers are within the band that it can handle. But I guess watch this space. Just finally, in a bit of an analysis of some of the interviews that you've done over the last month, week by week, and you used the word volatile earlier, sort of describing the external situation. Week by week, your strategy has needed to change to the point where I think the most recent was that you've talked about being tactically cautious. But, I'm sure that, if investors were to come to you and say, look, how do we play this? What would you tell them now? We're a week on from that comment.
See, if an investor is coming to me, there is a straightforward, a strategical plan to remain invested into the gold prices. The prices of gold have shown some negativity due to the US-Iran issues in the month of March. But I think that was relatively because of the last couple of years have, been a very bullish bull case scenario for gold and silver. And the bullions have outperformed the other asset classes. So hence the reaction was a little bit, onto the oversold reaction, I should say, or major profit booking was seen in the month of January and March. But this scenario definitely will, turn out to be positive for gold market. Any kind of a geopolitical issue has always been supported for gold, whether it be, Russia-Ukraine conflicts or, Western Asia side. This time around, the gold has shown some profit booking only because the US has been involved, and the dollar was shown as a forecast towards 105, 106 zones. But we have seen that the dollar is not creeping or rising very drastically towards 104, 105. In fact, 101, 102 is showing some strong resistance for dollar. So yeah, I think gold is here to stay. Remain invested. That is what we are focusing on. Investment strategically, we are saying that remain invested. Do your SIPs. Continue your SIPs through ETFs or physical, whatever they are doing.
Yeah, I'm going to jump in there. Jateen, thank you so much. Jateen Trivedi from LKP Securities with that roundup on his views on gold right now. Let's bring you some India IPO news now. Lalita Jewelry Mart's 176